Investors are pouring into defense stocks, but there are still some names investors are missing, the picks and shovels plays behind defense that are still early. Joining us now is MarketBeat analyst Chris Markoch with a list of 3 defense stocks. These are all picks and shovel defense plays that are under $20, almost under $15, that are still very early in their growth story. And Chris, we've done a similar story to this just last year. In fact, we did a video back in June of last year on 3 defense stocks under $10 at the time. Before we get to the new list of names you have for us today, all of these are new names we've never covered on the channel. I want to talk about the 3 stocks we talked about back in June of last year and then update our viewers on where those stocks are right now. A lot of them are very interesting stories. So let's start out with that first one to talk about from our June video and give an update on where it is today.
One of the stocks we talked about back in June of last year was Amprius Technologies, ticker symbol AMPX. It's a name that's been very much on the top of investors' minds lately. And in fact, we're taping this right after the company reported earnings. But let's go back to that June timeframe. When we taped, the stock was trading down around $4 a share. As we're taping this, the stock price is $14.61. It's more than tripled in that time. So this has been a great investment for investors who got in at that time. And that was actually probably that 6 to 8 months ago. That's when you really wanted to be in these defense stocks because they've been making this massive gain since then.
Yeah, this one is a perfect example of the kind of defense stocks that we're going to be talking about in this list coming up today. They're not pure play defense stories.
Correct.
They're companies that make pieces of the defense story that support different areas of defense. And I think that's the secret for some of these stocks that do so well is they're not the names that you might think of first, but they're still very much tied to any growth in defense. And AMPX is a battery company supporting drones. Makes a lot of sense for supporting that sector. Again, like you said, the earnings report just came out for AMPX. Let's just dive into that really quick because it was really strong. And that's why we're seeing such a good jump in AMPX this week.
What happened with the earnings report is they're not profitable yet, but the loss was much less than expected. The analysts were expecting a consensus loss of around $4 per share. They came in with only a penny a share loss. So that's encouraging. It means that they're probably closer to profitability than a lot of people thought. Revenue was also very strong. It came in at $25.9 million. Analysts were expecting $22.9 million. So again, it's a beat on that top line. Year over year, it was a really strong beat. It more than doubled. In fact, it's like about 150% beat from the year before. So very strong. It shows that demand for the company, for the company's products are strong. And that's only going to intensify as the likelihood increases that this $1 trillion proposed budget for the Department of War is going to get approved. And that means that companies like Amprius tend to benefit from that.
Yeah, let me know in the comments if you happen to buy AMPX back last summer when we were first talking around that $4 mark. I'd love to hear from you in the comments. The second stock we talked about last summer is Red Cat, and this one is a drone company, so more of a pure play in defense. But this one's also seen incredible growth, Chris.
Yeah, so Red Cat is an actual drone company. So they operate under 2 subsidiaries. They have contracts specifically with the U.S. military. That's one of the reasons, again, why it makes a lot of sense that investors are going to want to pay attention to this. When we talked about Red Cat in June, it had a price it was trading for just over $7. Well, today, the stock's trading at $14.74 as we're taping this right now. So it's more than doubled in that time. Again, you're seeing a lot of interest in drone stocks tied to what I just said about that $1 trillion budget that's trying to move its way through Congress. And of course, you saw a big spike in Red Cat in just the last 5 days. It's up 28.8%. And that has to do with, again, what's going on between the U.S. and Israel and Iran.
Yeah, and I think another thing to look at with Red Cat is even now, even after this big price jump in the last 5 days, it's still trading under those consensus price targets. Analysts have been leading the price targets higher on this one. Right now, the consensus is just over $19, on the high side, $22. So this is still fairly early for a stock that's already been incredibly successful since we were talking about it last year. All right, let's get to the third name, and I think this is a good mix and a good balance to show. We talked about 3 kind of speculative early plays back in June.
Right.
2 of them have incredibly taken off with a double or a triple. This last one has a different story, and I think that's a good warning for investors too, that not every early company
Right.
is going to be super successful.
Yeah, so the company is Allot, ALLOT, and the ticker symbol is ALLT. This company deals in cybersecurity and network intelligence. And of the 3 stocks in this group, this is the one that today is underperforming where we talked about it in June, but there's a reason for that. When we talked about Allot in June, it was trading for around $7 a share, just like Red Cat. Today, again, as we're taping this, the stock's trading at around $6.86. And the reason for that is because it's taken a big dip of 24% in the last month. But let's go back to, again, what the company does. We're talking about cybersecurity. We're talking about network intelligence. One of the biggest reasons why this company sold off, they delivered earnings at the end of February. The earnings were very good. The problem is investors are concerned that the company has their revenue too tied up with several large company contracts. And obviously, if those contracts were to go away, that would affect the growth of the company going forward. I also believe some of why the stock sold off so sharply towards the end of February, and again, that's the key, the end of February, was the fact that cybersecurity stocks were caught up in this idea of AI is going to eat software. And so all of the software stocks were down, and even cybersecurity stocks were down. That's changed in the last week. ALLT is up about 9.4% as we're taping this, and that's in the last 5 trading days. Some of that is due to the conflict with Iran, and some of it's also due to the fact that that's reorienting investors around the idea that cybersecurity is one of those areas of software that's going to be much more resilient, AI or no AI.
Yeah, with any of these early companies, there's absolutely going to be some volatility. But the point of this video and this list that we're about to get into with these 3 new names is looking at getting into companies early when there's still that risk involved, but also risk means potential reward if these companies do take off. And we saw that in 2 out of 3 on the list that we did last summer. This third one still has potential. It's not dead yet, but still that concern is there for that company. The 3 names we have coming up on this list for you today are all newer, have a lot of growth potential ahead and a lot of risk. So we're going to get into those. If this is the kind of stocks that you were looking for, I want to make sure you check out our very new special report on MarketBeat.com. This is on the hottest IPOs that Wall Street is watching for 2026. These are those up and coming companies, some names you might have heard of, others you haven't, that Wall Street is really excited to go public this year. If you want to check out that list and put them on your watch list too, checking when those companies might actually IPO, you can scan the QR code or click the link in the description for that free report on MarketBeat.com right now. It's the kind of stocks that are right up your alley if this is the kind of video for you. Of course, I am excited to dive into the names that you have for us today. These are all new, not anything we've talked about on the channel before. So let's get into it. What's the first defense company you have for us today that's right now trading under $20? Almost all of these are trading under 15, but they're close enough. We're going to say under $20 in the defense sector.
Yeah, the first company is called Unusual Machines. That's the actual name, Unusual Machines. Ticker symbol is UMAC. This is definitely a picks and shovels play for the US drone market. Now, the company doesn't build complete drone platforms, but what they do is they supply the components like the motors and the cameras and the flight controllers and accessories that the drone market needs. So they've become a critical supplier for the US military and also for commercial customers. It already has a contract with the 101st Airborne Division of the U.S. Army. So that's important in terms of looking at sustainable revenue going forward. The interesting thing here from an investing standpoint, the stock trades on the NYSE American market, but it should probably be available in most of the trading platforms that investors would use. The stock's only been trading since 2024, okay? This is a relatively new public company. It's up only 18% in the last 12 months, but it's up over 41% year to date. And a lot of that has to do, again, with the attention being paid on that $1 trillion budget that's currently being circulated to be approved by Congress and to try to get this new age defense system funded for the Pentagon.
This is such an interesting company, and goes back to if you watch our content regularly, I know you've probably seen we have the CEO of Dragonfly Drones on a few different times talking about the drone sector. And one thing he mentioned when I did an interview with him just a couple of weeks ago, he talked about it's not just who can produce the drones, but also who can train soldiers on how to properly use them and actually make them useful in a combat situation in any kind of military operation. And so a company that's specifically about making better controls.
Yep.
I think that this company does goggles to help, virtual
Right.
reality control these drones. That makes sense for a future growth case because it's all about being able to use them effectively. You can have the best drone, but
Right.
if you can't operate it well, it's not actually the best drone. So I think that this company has a unique kind of niche in the drone sector.
I do too, and I think that's one of the keys that investors are gonna be wanting to watch for are these companies that become essential suppliers for the US military, because those are gonna be the ones that you're gonna be able to see them get contracts without going through maybe some of the normal bidding process, and if they can just be green lighted to get the contracts, that's a big benefit for the company.
Yeah, this is the stock why we're saying this list is under $20 and not under 15 because right now as we're taping this, it's right at $15, but we're seeing such a surge in this entire defense sector. Who knows by in 24 hours how much higher the stock could go. It's new. I also think that's why what makes this one interesting is there's not a lot of history here. It's a
Yeah.
newly public company, but the analysts who are covering this stock are still excited about it. Let's talk about what they're saying so far.
There's only 4 analysts that have given a price target, but the price target they've given, the consensus is $20 a share. So that's still about 35% upside from where the stock is trading at as we're taping this. Since the beginning of the year, we've only had one price target come in, and that was from Needham and Company, and that's coming in again right at $20. So there's not a lot of analyst coverage, but the analysts that are covering it are bullish on the company. Not a lot of institutional buying on it yet, but the ratio of institutional buying to institutional selling is heavily skewed into institutional buying.
Yeah, I'm curious about it's such a new company. Is
Right.
there any of that revenue earnings data for this company yet? Is it profitable yet? I'd assume it's pretty early in its history. And then one other question to wrap up this name is in the drone story, it is really important that these are American made, North American produced products because that security portion of domestic production is a big factor when it comes to US defense contracts. Let's talk about all of those areas quick for this company.
First of all, the company is an American company, so we can check that box. The company's not profitable right now. It's not expected to be profitable in the next 4 quarters. What is interesting is on the revenue side of it. So in the last quarter where they reported, they had revenue coming in at just over 2 million. Again, not a lot of revenue, but still they are generating revenue. They report earnings on March 9th. They are projected at that point uh to deliver 3.5 million in revenue. So that's a nice quarter over quarter jump. But if you look at where revenue is looking for next year, you're looking at some explosive growth. By the same quarter, they're coming up on their Q4 for 2025. When you look at where revenue projections are for Q4 in 2026, analysts are projecting 8.4 million. So you're more than doubling of the revenue during that time. So this is a growth story that's in the early stages. That's why analysts are bullish on the stock, have again price targets of $20, and those price targets could easily go higher if the company meets or exceeds these revenue targets.
All right, a really great first name to look at in this defense picks and shovels story that we're looking at is some of these early up and coming companies in the defense sector. Let's get to the second name you have on this list.
Yeah, so the second name that we have on this list is a company called Inseego. This is a little bit more of an indirect play in the defense sector, but it still applies. So the company offers 5G and 4G mobile broadband solutions, and their tie to the defense industry is the fact that um, you have a lot of military operations that require piloting of remotely operating vehicles or aircraft with full visual awareness. That's the type of connectivity that Inseego provides, and they are currently providing it for the military.
Again, like you said, the names on this list are that loose connection, and yet they do have those military contracts. Let's talk about how well this company is doing at securing those and kind of getting defense contracts as part of its business model.
When you look at the earnings over the last year, you're seeing stable revenue. It grew a little bit year over year. But the bigger story here is this is now looking to be a solidly profitable company. They reported earnings on February 19th of this year, delivered positive earnings per share of 12 cents. The year before, they were at negative 4 cents. So now you've seen the last couple of quarters, the company's come in with positive earnings per share, at least on an adjusted basis. And you're still seeing them generate around that $45 million to $48 million in revenue. So it's not necessarily a fast growing company right now, but they have achieved a profit. And as you look at the analyst forecasts, they're bullish on this stock. They're bullish on what the future of the stock could be.
Yeah, I want to talk about those analyst forecasts specifically in just a minute, but I also think that this is one, it's very different than the first company we had on the list, which is a very new stock story. It didn't have a long history as a public company. This one does have a longer history as a public company, and it's not that great. I think it's important to look at the long-term history on this chart and see why it hasn't really seen the growth that's been expected of it for a while.
This is a small company. It's a very tiny company, actually. The market cap's only about 187 million. And we know this has been a brutal time to be investing in small caps. And I think that that's been part of the story here. It's a small cap stock. It's not getting much attention. Doesn't generate a ton of revenue. But we're talking now about a potential inflection point, especially if the company can latch in and get some of these government contracts. Again, we're not saying any of this is going to happen, but if you're looking at a name to put on a watch list of companies that are trading under $20 that have the potential for upside, this is a name that you'd have to be including on that list.
I think the upside is an important point here. Let's get to the specifics of what analysts have to say for this company. Right now, I'm showing a little over 40% upside. Is that right?
The analyst price target is for $16.50. And so that's 42.3% upside from where it's at right now. The most recent price targets came in January of this year. That was from TD Cowen, and they gave it a price target of $15. They raised that from $14. So analysts are bullish.
And a loose connection to that defense industry, but produces a product that has the potential to be beneficial in the defense story, especially as drones and connectivity become a bigger part of military and defense contracts. This one seems a little bit even more risky than the first name on the list. And we're kind of working our way down this list to even more risk. So the last name that you have for us, I know, is the most speculative play, but it definitely has the highest upside if you're looking at that too. So let's get to this last name on the list. And to end the video, I'm going to say which one to add to Bridget's Buys watch list because all three of these are interesting names. They all carry a lot of risk. So I haven't decided which one I want to add to my own watch list on MarketBeat.com yet. So let's get into this last one and then I'll share my pick.
This company is it's got about a $450 million market cap, but it's not only trading for under $15, Bridget. This one's this one's trading as a penny stock. As we're talking about it today, it's trading around $1.20 a share, and it's had a fairly brutal time of it. It's down 36% year to date. It's down 29% in the last month. It's down 30% in the last day. So it's certainly not getting that much of a tailwind from this defense industry. But the company is operating in that same universe that Amprius operates in. They develop and produce AI-enhanced lithium metal and lithium ion rechargeable battery technologies. And one of the areas that they target is urban air mobility. That's the eVTOL space, drones, robotics. So that has the tie-in with, again, potentially tying in with the defense contracting angle.
Yeah, this one is so interesting. And I do think that, at least reading the description about the company, it does sound like the batteries that they're producing are geared towards that aerospace and eVTOL space heavily.
Yep.
And eVTOL companies, those electric takeoff vehicles, have absolutely had that connection to defense. There was actually some contracts last year, but that eVTOL space this year has been slow to take off. And so I'm curious if you think that there's a connection between this battery company and what's been happening in that eVTOL space.
I think that's a part of it. I think another part of it is that I mentioned the fact that this company was playing in the same universe as Amprius. One of the things that's worth noting is that the company is shifting some of their manufacturing capacity from in Southeast Asia to become NDAA compliant. And so they're making a pivot directly towards the US defense drone market. Now, the question is going to be there, how much of a foothold can they get in that market when you've already got a company like Amprius that's already there? But again, this is a speculative play. It's a penny stock. It's one that if you're thinking about getting into this market, this may be a name you might want to consider. As far as the eVTOL space goes, absolutely that could be a play. Now, again, there's a lot of concern about what the future of these eVTOLs are going to be from a commercial standpoint, but there's no doubt that they are being used in military applications. And that's where the sort of proof of concept for those vehicles is going to be. And again, I think both Archer and Joby, I believe both of them got contracts with US government. So I think the US government's basically hedging themselves and saying, we're not just investing in one, we're investing in both.
Yeah, and that could be interesting for a battery company like this that's servicing this area specifically. Obviously, there's different competitive advantages to the types of batteries, the technology behind these companies too. So that's something, if you're an investor, you want to dive deeper into the technology, what sets this company apart from what AMPX is providing. I think for this video's sake, I want to get into what analysts are saying
Yeah,
and what potential we do see in this stock. Again, a penny stock, so we're not
right.
expecting a lot of coverage,
Correct.
but what coverage is there is pretty bullish on the future of this company.
Absolutely. So what we're seeing is a price target of $4. That's over 240% higher than where it's at today. It would still leave it technically in penny stock territory, but certainly if you were thinking about investing in the stock at $1, that's a nice gain for you to make, even if you're just looking at making a momentum trade and trying to capitalize on it that way. If you spin forward revenue and earnings, the company is not profitable. It's not looking like it's going to be profitable next year. It's looking like, in fact, it may have a little bit of a higher cash burn in the coming 12 months than it did in the last 12 months. That's not necessarily a disqualifier if that money is being put towards growth. And it might be, because when you look at the revenue projections, especially in the second half of this year, are expected to be very strong. For example, in the fourth quarter of this year, and they just reported earnings on March 4th, the company delivered $4.5 million in revenue. That they missed. Analysts were expecting 6.9 million. They delivered 4.6. That's another reason. That's another factor weighing on the stock. But if you spin that ahead 4 quarters from now, analysts are expecting this company to be generating, if I'm reading that right, 13.8 million. So they're seeing huge revenue gains for this company. And again, some of that may be the eVTOL angle, some of that may be the drone angle, but certainly what you're seeing is that analysts are expecting that this entire sector is likely to see huge revenue gains, and there's room for more than just a name like Amprius in the sector. This could be one of those names.
3 really interesting stories, all kind of adjacent to supporting the defense sector. I think this last one is really intriguing, but it might be more of a risk than I want to put on the watch list. I think what I'm going to put on Bridget's buys for this video is the first name we talked about, Unusual Machines. I think it has the closest direct tie to what's going on in defense and has a really good chance of getting defense as long as they can execute and continue to grow this business. Again, very new company. I think that's interesting too. So I'm going to add this one to the watch list and see how it continues to move over time. If you haven't checked that out yet, scan the QR code, click the link in the description to check out Bridget's Buys watch list and follow along with all of the names we talk about on this channel. If you are really interested in these up and coming defense stocks, make sure to check out this video on a list of 10 defense stocks that are set to surge this year with all of the new investment into the defense sector right now. This is, again, a list of 10 different names to look at. You can check that video out here.